Hello and welcome. I'm so excited to introduce to you Tanner Tedsen. He is an insurance broker.
Yeah.
An insurance broker, which I just actually found out. I thought he could only broker through Farmers Insurance, which is not true. He can shop your insurance policy and find the best policy from any company. Is that true?
Not quite every company, but
I was close.
we do have a lot of options. So how it works with Farmers, just to kind of give you a little bit of a background, is Farmers gives us the ability to shop whenever they don't offer a product. So let's say there's a home way up in Boulder Creek, Farmers doesn't want to touch it because of fire hazard or whatever, we can look for other carriers for that. Or even something like a commercial business, let's say Farmers doesn't like to do tattoo shops. We actually insure quite a few tattoo shops, and we use different carriers to find coverages for companies like that.
Why?
Just different risk and liability. And, a lot of the larger insurance companies, they're a lot more, Main Street, mom and pop, very basic type stuff.
Yeah.
So when we have to get a little more creative, we can then broker out, use other carriers, find coverage elsewhere.
Cool. Okay.
Yeah.
Insurance seems to be a hot topic lately. Can you talk a little bit about the shift in the market, what you've been experiencing as far as State Farm leaving California?
Allstate
left California. Farmers is still here.
Farmers is
so
still
far.
here. Yeah.
And so what are you experiencing as far as providing quotes and helping your clients if they need to make an insurance claim, etc.?
Yeah, so I would say the last few months have been the most chaotic the insurance market has probably ever been in the state of California. We have the biggest companies. State Farm is, I think, the biggest insurance company in the country, and they decided to pull up their roots and head out just because they saw California as too much of a risk. So we're seeing smaller companies do the same, and really you just need to be on your toes and be listening to the different carriers and the news that's going around to see who's still offering policies. We are writing a lot of California Fair Plan, which a lot of people have heard of. For those who haven't, California Fair Plan offers fire coverage for people who can't find it elsewhere. So it's kind of a last resort option, but the coverage is great. The customer service with Fair Plan's been great. We've had a few clients go through the claim process, and it's been super smooth, and the payouts were what were expected. So we do write a lot of California Fair Plan, especially for homes up in the Santa Cruz Mountains. So, between all of that going on, people are freaking out a little bit. And our phone's been ringing off the hook from, our realtor referral partners, lender referral partners, just seeing what's going on and what's available. So we still do have options. Farmers is still writing homes that are not in a huge risk area. And so we have options, and we just got to get a little bit creative. It's a little more work on our end sometimes to find the product to fit the client's needs, but there's stuff out there.
Can you dive in a little bit more and talk about the California Fair Plan? Because I was under the impression, as I'm sure many are, that it was a plan that is supported by the state of California. But that
great question.
Not true.
Yeah. So California Fair Plan, the one thing I wish they could change is the name, because you hear California Fair Plan and instantly you're like taxpayer money, government funded. It's not that. So Fair Plan is actually a private company. It was started back in the 60s, and it was started during the 60s during the riots and the brush fires, because a lot of insurance carriers were like, this state's a little crazy. I don't know if we want to be selling policies here. So even back then, it was difficult to find fire insurance. So Fair Plan was created to give people a chance that couldn't find it in the traditional insurance market. It's actually backed by every insurance company that sells property and casualty insurance in California, has to contribute to Fair Plan's financial pool. Okay. So it's actually financially stronger than any single insurance company because it's backed by every insurance company. The prices are a little bit more expensive than we're used to, but when we look at the risk, the prices are pretty on point. So I think we've been really used to discounted rates in California. For example, just using some round numbers, like a 2,000 square foot home in Scotts Valley, let's say it was $2,500 a year to insure. Now there's not many options and we have to go Fair Plan. So that home might be $5,000 a year, $6,000 a year. But when you're looking at the amount of coverage you have and the actual risk that home has, $5,000 or $6,000 a year is pretty reasonable. It makes sense for the risk that the company's taking on. So, Fair Plan, it gets a bad rap. People see that name out there and they kind of freak out a little bit. Our experience with them has been great. We write multiple Fair Plan policies a week. It's a whole different process with Fair Plan. There's a few more steps involved and a few more hoops to jump through. So we always recommend, at least a couple weeks heads up before you're closing on a home or, canceling your old policy, whatever it might be. The more time we have to get everything in place, the better. We're going to have to go take photos. We have to really dial in the coverage to meet the owner's specific needs. It's not like your traditional homeowners where you just get a policy and it has all these included coverages and you never even think about the limits on anything. Fair Plan, we pick and choose what coverages we want and then what limits we want. So it's just a little bit more of an involved process, but it's not too bad. It's not as bad as everyone makes it out to be.
Okay,
yeah.
That's not terrible.
Yeah.
Can you tell us a little bit about the streamlined process if you weren't going California Fair Plan? Like, from my personal standpoint, I'm going to be super selfish right now and ask you, like, I have a client, they wrote an offer on a house, their offer gets accepted. I'm always like, immediately during your due diligence, you need to start shopping for insurance because it is a big unknown and you want to make sure, one, that it's insurable and what those costs are going to be. So can you talk about, let's say our offer on a property just gets accepted and I'm like, call Tanner, he's going to walk you through the process of your insurance options and what you need in order to get insured.
Yeah, perfect. Let's go Fair Plan for the first option. We have to go Fair Plan. We're up in Ben Lomond, let's say. And we need to go Fair Plan for fire coverage. So step one, initial contact. I just need to get basic information. First names, last names, birthdays, contact info. Once I have that in the address, I can put together a quote. And typically, that's a fairly quick process. I'll get the quote same day. Once the quote's out to the client, I always send a link directly to my calendar so they can book a phone call, a Zoom meeting, an in-person meeting, whatever it might be, whatever's easiest for them, to get that meeting scheduled so we can verify all the coverages that they want and make any changes. We can make changes to coverage, deductibles, all these different things that we can kind of pull to adjust premium based on their needs. So once we have that quote solidified and we're like, this is what we want to move forward with, I actually go out and take photos of the property. So that's typically about a day process to get that done. Once the photos are taken, we submit an application, and an application sent off to the underwriting team at California Fair Plan. Once that's done, it's about a 3 to 5 day turnaround process for them to get it back to us. When State Farm first left California and everyone was going Fair Plan, it was about a 7 day. So now they're kind of back to that 3 to 5 day. Okay. Once we get an approved quote back, the buyer then has to make a 40% down payment from their bank account to Fair Plan in order to issue the insurance policy. So typically when you're on a purchase, your insurance is paid through escrow. With Fair Plan, they won't issue evidence of insurance until they have that 40%.
Interesting.
So we take the 40% down and then the 60% remaining is sent to escrow.
Got it.
So that's your California Fair Plan policy.
Okay.
To be properly covered, you need to have what's called a difference in conditions policy, a DIC. Sometimes people call it a wrap or a wraparound policy. We write ours through Farmers most of the time, depending on the property and location and everything. And that policy is going to contain coverage for things like liability, theft, and water damage. So you combine the DIC with the Fair Plan, and you have what our traditional homeowners policies offer.
Got it.
The process on the DIC is a lot faster. That one's still paid through escrow, 100% paid through escrow. And it's, same kind of deal. We just need the basic information, put together a quote. Those ones are a lot less expensive. They're typically about a quarter of the cost of the Fair Plan policy. So we get those two evidence of insurance, send that off to escrow. You go sign your closing documents. You pay your year of insurance through closing cost, and then you're good for the first year.
Nice.
And that's kind of step by step from start to finish.
Okay.
Yeah.
And then what if you don't need a Fair Plan?
If you don't need Fair Plan, it's a little bit quicker.
Okay.
It's the same information needed. We don't have to take photos unless it's a high value home. Sometimes we'll have to go in and take photos. But typically it's just a little bit more streamlined. We can do it in a day or two versus a week or two.
Okay.
Yeah.
Have you ever had a person or a property that is not insurable, and then what do you do?
The biggest thing that would make a property uninsurable is the condition.
Okay.
And when that's the case, there's not much we can do. If it's super dilapidated, the roof has a hole in it, walls are falling over, no insurance company in their right mind is going to write a policy on that.
That's a contractor's dream.
Yeah, exactly. The contractor's dream, fixer-upper, come on in.
All cash.
Yeah, so that's really the only time we haven't been able to find coverage. Right now, there are a few products that are really difficult to write. Mobile homes, for one. We're having a really hard time finding carriers for mobile homes. And then
what are the restrictions on that? Why is that
it's
challenging?
the carriers that we write through. They're just putting a pause in California as well.
Okay.
I think that everyone's just kind of pumping the brakes a little bit, so to speak, just to let things kind of level out a little bit, and then they'll come back into the marketplace. A lot of these companies that are making the move out, this isn't going to be a permanent thing.
Right.
And, it could be a year, it could be a couple years, but the goal is to come back,
Okay.
So yeah, mobile homes have been tricky. And then strangely enough, condos. It's been a little bit difficult to find coverage for condos.
Even condos that have more than 50% owner occupied?
Yeah, so with the condos, you have two different policy types. Typically, we write what's called an HO6 policy, and that's walls in coverage.
Right.
So what that says is that your HOA that you pay into every month pays for the insurance on the exterior of the condo complex.
Right.
And then you get a unit owner policy in HO6. And for some reason, carriers are just kind of dropping that HO6 policy. I think they're just trying to trim where they can and try to minimize risks. And for some reason, condos ended up on the list. Yeah, we do have some carriers that are still doing it, but those are two that recently we've been, having to do some digging to find people that will write them.
Okay.
Yeah.
And now what about a person? Like, let's say that the house and the property are insurable. Is there a reason that a person would not be able to qualify for an insurance policy?
I would say the one thing that we have seen is repetitive water loss. So typically on homes, if you have a single water loss, whether it's the client who had a water loss on their previous home, or if it's the home they're moving into has a water loss, at least with farmers, we can get away with having one. If we have more than one, then there's going to be some issues. Sometimes we can go to underwriting and explain the situation. Oftentimes you'll have a claim show up on your history when nothing was even paid out. So there's times where we can kind of work it and make it happen. But repetitive water loss seems to be one thing that can disqualify you from getting coverage.
Okay, and what is water loss?
Water loss, it's different than flood. So water loss is going to be something like a pipe bursting, a toilet overflowing, leak in the roof, leak in the skylight, that type of thing.
Gotcha. Okay. So State Farm is leaving California. Allstate is leaving California. What if those two or one of those coverages were the policy in place on a property? Do you anticipate that they are going to not renew people's property insurance if they are insured by those two companies?
Yeah, so I know when both of those companies made the announcement, they wanted to reassure their policyholders that, if you have a State Farm policy, this doesn't necessarily mean we're going to non-renew you. That being said, before they even made that announcement, every carrier in the state's been non-renewing people. So this has been going on for years. State Farm was non-renewing, Farmers, we non-renew people. I probably have 15 non-renewals I'm working on right now for the next few months just to make sure I can get people coverage. So, while they made that statement, I think that we're still going to see non-renewals from every company. I don't think that State Farm or Allstate by any means is going to say every policy we had here, they're out.
Right.
But I think if you're in an area that is extremely high risk, or if you have, outdated updates, so your roof is really important to have an updated roof, plumbing, heating, electrical, all of that, those factor in to the non-renewal decision.
Okay.
So yeah, I think that it's something that we're going to continue to see. A lot of the times with non-renewal too, there can be some conversations had to be like, oh, if we change this, fix this, can we work on it?
Okay.
Yeah.
And so then what is the procedure if an insurance company does not renew a policy?
So typically we'll have to go fair plan because most non-renewals are going to be due to fire risk.
Okay.
So with farmers, if they were a farmer's client and had a traditional homeowner's policy, we would just reduce that to a DIC, a difference in conditions policy. So the cost on that would drop significantly, and then we would add the fair plan policy back in.
Okay.
The nice thing about that, it allows you to keep your home auto discount and your home umbrella discount. So it allows you to keep that package with farmers at the good rates on all of your other policies.
Okay.
But you do have to get the fire coverage through fair plan.
Okay.
Yeah.
Can you elaborate a little bit on Fireline scores, what insurance companies are looking for, and how they are calculated?
Great question. So let's back that up just a little bit. Fireline score typically is a determining factor whether or not you have to go with California Fair Plan for fire coverage or not. So Fireline scores, it's 0 all the way up to, I believe, 30. And Fireline score takes a few things into consideration. It's going to be fuel surrounding a property, the slope of a property, distance to a fire station, distance to a fire hydrant, and that's a public hydrant, so not just a water tank with a spigot. And then the last one is access issues. So can emergency vehicles get to your home easily? So this is a third-party proprietary system that unfortunately is not available to the public. We have to go through the whole quote process to get the Fireline score. And all I do is I type in an address and it spits out a score for me. So I don't even know the algorithm that's going on behind the scenes. But for us, at least with farmers, any home that has a score of 3 or under, we can write just traditional farmers. If it's a 4 or above, we have to go with fair plan.
Gotcha.
You know, every company is going to be a little bit different on how they do that. But that's how we do it with farmers. And Fireline score, it's a big topic of conversation too. And whenever I give presentations or anything like that, everyone's always asking, what's my Fireline score? What's my Fireline score? And I wish it was available to everyone. But if you are interested, you can email me, call me, I'll figure it out for you.
Okay.
Yeah.
Cool. What steps can a homeowner take to try and minimize or mitigate their fire line or fire defensibility in order to potentially qualify for non-fair plan policy?
So at this time, there is nothing that you can do to challenge the Fireline score.
Okay.
That's a really common question, and I have a lot of clients who take great care of their property. They have fire breaks, they used fire, retardant materials, they have sprinkler systems outside and inside, and I'm a huge supporter of, yes, you should get credit for that. You should either get discounts or the ability to not have to go with fair plan. And there's talk about programs like that coming out. There's nothing yet though.
Okay.
So all of that, it's going to give you the peace of mind and everything that comes along with that, but it's not going to help with your insurance too much.
You can sleep at night.
Yeah.
Okay. Well, I think that kind of sums up like a lot of questions that I've personally been having and that I've been getting from my clients. So let's talk about you, your specific company, who you work with, what differentiates you from another local insurance company.
Totally. So yeah, we are Tedsen Insurance Agency. It's myself, my brother Chase, and our mom Trish. We have over 25 years combined experience in the industry. We've been in Santa Cruz since the 50s.
Yeah.
This is our home. These are our people. This is our community. So we just love being able to help people out. We have a really big community-based background. My wife and I have a nonprofit. My mom has a nonprofit, and we're just all about, looking out for one another, taking care of your neighbor, just being people that you want to be around and you want to work with. So we really, try to make all of our clients have that same feeling. We want them to know we have their back. Every recommendation that we give to our clients is how we would insure our own property, our own car, our own business, whatever it might be. So we're super transparent about all of that. Even before State Farm made the announcement that they were leaving California, I recommended so many people to reach out to State Farm when I knew they would have a better product than I had available.
I like that.
For us, it's the clients first, and we want you to have the best option, and we would love for that to be with us.
Yeah.
And, hopefully it is with us, but if it's not, that's okay. And it'll all come back around, so we just really want to operate on those principles and just, taking care of this community and doing what we can to help.
I love that.
Yeah.
Do you want to talk a little bit about your nonprofits? Because I think
Yeah,
it's really inspiring.
I'd love to. Yeah. So the nonprofit that my wife Abigail and I started, it's called The Village. And essentially what it is, it's a nonprofit giving circle. We do an event each quarter. And if you become a member of The Village, you can nominate any nonprofit you want in Santa Cruz County each quarter. Out of those nominations, we choose 3, and then we go out and do a video very similar to this, and we get to meet the founder, check out the location, meet some of the people that they might be helping. And then at our event, we play the videos and we hold a vote, and whoever wins that vote takes home that quarter's donation. So the donation's determined by the amount of paid members we have. So it's $100 per member per event is what it comes out to. So we just had an event 2 weeks ago now. It was at Greater Purpose Brewing Company.
I know, I was supposed to go to that.
Yeah, it was a fun one. It was kind of the last hurrah because they're actually transitioning out of Greater Purpose there. But Yoga for All movement was actually the winner of the donation for that. They took home $4,000 prize, so that was amazing. If anyone's interested in getting more info on that, we would love to have you at an event. It's just a cool community. It's, we have people from 20 years old to 75 years old, and the way I look at it, if you're showing up to an event like that, in my eyes, you're vetted as a good person. And so it's just great connections and good community. And we're learning so much about what's happening in this community. You know, without the village, I wouldn't have known about half the nonprofits I know about.
That's so cool.
So it's just bringing that awareness, giving some financial support, and then creating a community around it where we all enjoy getting together and having a couple beers and chatting and watching a video and just connecting. So
Very cool.
yeah, that's the village.
I love it.
Yeah.
I love it. If you want to get involved in that, call him.
Please do. We would love to have you.
Yeah. I think that's it. Anything else you want to add?
I think we hit all the main ones. Yeah, if anyone wants to get in more detail and a little bit more in depth, feel free to reach out to me. I can provide all my contact info, my little QR code that has all my contacts on there. And yeah, we'll go from there.
Otherwise, call Tanner, Tedsen Insurance. They rock. They're so helpful and knowledgeable, as you can tell. Thank you so much.
Thank you, and really appreciate you having us on here.
Yeah.
Yeah.
Cool. We did it.